Hey, this is Nick Fenton here with TickerTank.com, taking a look at the gold futures chart. This is a one-year chart. We are cautiously bearish on gold right now, and kind of wanted to show you why, what we're seeing, and what we're going to be looking for before we put any position on. So the first thing I want to do is go out here to a 3-year daily bars chart. What you can see here is if we draw a trend line from this low, and you can see we've been in a significant uptrend here in gold for the past 3 years. So, you can't go against that strong of an uptrend just because of our next bearish element. So we've got the 3-year uptrend. Let's go into a 1-year daily bars chart. And what you can see here is we've got a bit of a triangle, a symmetrical triangle here in gold. And as of yesterday, this triangle broke in a bearish manner. So you can see this move yesterday was the bearish triangle break. And today we're seeing a little bit of continuation to the downside. Yesterday was a very ugly day for gold. I would actually anticipate this to retrace back towards this line and then continue its breakdown. So, what does this symmetrical triangle mean? Well, it means there's potentially some bearish momentum that could cause gold to break this 3-year uptrend support line. And you also have to remember that not only is there a 3-year uptrend support line, but this blue, kind of squiggly line is the 200-day simple moving average. And that provides quite a bit of support from a psychological and technical perspective. And as you can see here, both the 3-year uptrend support line and 200-day simple moving average are basically neck and neck here. So that's double the strength of support from a technical perspective, theoretically. And so let's take a look at what does this symmetrical triangle mean now that we know all that. First of all, if you take a look here at the high on the triangle, which is about 1925, and the low, which is approximately 1525, you can see that the height of this triangle is 400 points, give or take. The point that we saw the breakout was right around 1720. So if you subtract 400 from that 1720 level, it takes you down to this approximately 1320. Again, give or take a few points. A little bit of margin of error there is realistic. So the measured move for this symmetrical triangle bearish break that we've already seen is 1320, roughly. 1320 would clearly take it below this 3-year uptrend support line, as well as below the 200-day simple moving average. So what we're looking for before we put any sort of bearish position on is we want to see it break and hold below this 3-year uptrend support line, as well as the 2-year simple moving average. Reason being, that's such a strong support level that until that breaks, it's not a good reward risk situation to put on a bearish position, unless you're going way up here to like 1900 or even 1800 as your max gain point. So we're looking for something a little bit more aggressive in this case in gold, and we will put on an aggressive position, bearish position, if we get this break below this uptrend support line. And it may take another week or two before that actually happens, but given the price action here, we think that there's a good possibility. So here's the price action, and then if you take a look down here at the very bottom, we've got our historical volatility, and you can see the historical volatility. There's quite a bit of resistance for a while, right around that 20% level. So we popped up a few times. Average historical volatility right around 15%. We bumped up to that 20 level, pulled back, bumped up, broke through it finally, popped up here, highs around 38% implied volatility, and faded back down, found support at this 20 level several times. In order, we think there's possibility that this implied volatility level is going to spike back towards the 30-35 range. And that won't happen unless you get this bearish breakdown in this chart. So that's just kind of another secondary reasoning that we think there may be potential for some downside move based on this support in the historical implied volatility, which should or may result in a nice pop. So all in all, that's our analysis on gold. We have no position on it yet, but we are keeping a close eye on it, and we will put a position on once we see 2 days closings below this massive 3-year uptrend support coupled with 200-day simple moving average support.